Good afternoon. I was planning to speak in Hebrew, but if the majority of you would like an English presentation, I should do so. I apologize that my presentation is in Hebrew. I'll try to sum up the headlines. First of all, my name is Yoad Frenkel. I used to be, until 6 years ago, the head of the exchange information in the International Tax Division in the Israeli Tax Authority, and for the past 6 years I'm the head of the International Tax Department at Ziv Sharon & Co. Law Office. I will lecture about the exchange of information between tax authorities, focusing on Israel, but of course with the analysis of the global picture. First of all, what is the, in general, what is the exchange information? Exchange information, as explained in the OECD commentary, is a procedure that is meant to assert the facts upon which the treaties are applicated. The OECD Article 26 is now with a high scope, and of course it covers the application of domestic law and of course the treaties. In 2012, the OECD in a special report mentioned that it will also cover in certain conditions fishing expedition. I will analyze further on what the conditions are, but of course this was embedded into the 2014 commentary. It must be, of course, stressed that the exchange information is in an assessment procedure and not for the enforcement. For the enforcement, we have a collection of the enforcement of collection in Article 27 of the OECD commentary. And basically, or roughly speaking, the structure of Article 26 is paragraph 1 is, of course, the scope of the information exchange and the kind of information exchange. Paragraph 2 are the factors that are entitled to be revealed to that information. Paragraph 3 deals with the limitations of the exchange of information. Paragraph 4 deals with the lack of the need for a local interest to provide information, meaning that the requested country cannot say to the requesting country, I will not provide that information because I have no interest. And we have, you're laughing, but we have a treaty with Singapore that lacks this section 26.4. And Singapore told us, well, I didn't try even, but it will of course tell us if Israel will try to exchange information on request, that it has no interest. When the Israeli Tax Authority will ask for information about income derived by an Israeli resident in Singapore, and the Singapore does not have any interest, such as withholding at source or any interest in the tax, the answer will be no, we will not provide information. And of course, the OECD felt it necessary to include that the requested state cannot decline this exchange information request because it has no interest. Paragraph 5 is, of course, the famous one about the bank secrecy. As we all know, until March 2009, Switzerland, Belgium, Luxembourg, Austria had bank secrecy in the domestic law, did not include paragraph 5 of Article 26 in their treaties, and therefore you couldn't exchange bank information with those four problematic countries. Things, of course, change, especially with the CRS that I'm going to talk about. So if we analyze briefly paragraph 1, the term is now foreseeably irrelevant. It, of course, includes exchange information regarding tax offenses, and in the 2012 update, effective as of the OECD new model commentary from July 2014, you can also transfer the information to authorities that are not tax authorities, the police, anti-money laundering unit, etc. The current policy of the Israeli Tax Authority is still not to include this, but this, of course, is now in the OECD commentary. What are the taxes that are relevant? Taxes of every kind and description. This is not, again, the policy of the Israeli Tax Authority. The Israeli Tax Authority, in its conventions, and I was also taking part in the negotiations for DTAs, in its conventions, of course, limited the taxes to direct taxes that are covered by the double taxation treaty. And of course, much has been changed about the fishing expedition. The Germany, of course, pressurized Switzerland and other countries to abolish this bank secrecy. And after they've done so, they, of course, moved to the fishing expedition, stating that they should get information about a group of German taxpayers that evaded income that was derived in Switzerland. Of course, in general, fishing expedition is not allowed, but of course, with the CRS coming up and the change of the policy, as we'll see in a minute, fishing expedition, of course, will take place. Germany had a problem because there was a famous case of some German taxpayer that met a broker in Switzerland, and that broker told them, look, if you invest in a certain financial instrument, then the interest will not be subject to tax in Germany. Of course, that was not true. And the German tax authority did not have the information about the identity of the members of the group. So they immediately asked Switzerland, with the exchange information request, to identify the members of the group. And the Swiss tax authority said, no, this is a fishing expedition. Now, under the commentary, because they know who is the Swiss broker, they can interview him. They can, of course, go to the financial institute or the bank that encouraged this. They can get that information. So the conditions to a legitimate fishing expeditions are a detailed description of the group, covering all the relevant facts, but you don't need, of course, to know the identity of each member of the group. And, of course, the requested information should encourage the tax reporting of the members of the group. Now, there is some purpose of the exchange information. Of course, first of all, is the application of the articles of the Dublin Convention, such as royalties and beneficial ownership. If a certain treaty, for example, the treaty between Israel and Hungary, provides that there is a zero withholding tax rate on royalties as long as the beneficial owner of the recipient of the royalties is a Hungarian resident, and vice versa. And of course, we had a certain case back in the Israeli Tax Authority where we suspected that the Hungarian company was not actually the beneficial owner, and the Hungarian Tax Authority, after an exchange information request, committed an audit, and it was found out that there's no one in the Hungarian company. It didn't file any tax returns in Hungary. All its directors were actually in the United States. All the managers were in the United States. So we applied the US-Israel treaty that has a 15% withholding tax. Another thing is, of course, finding out whether a foreign tax credit that is demanded by the Israeli taxpayer was indeed paid in the source country. Another thing is, of course, transfer pricing. And sometimes before you do mutual agreement procedure, for example, the most popular now in Israel is residence. Mr. A is claiming that he's a resident of Singapore, but the Israeli Tax Authority argues that he's a resident of Israel. Then, of course, there's a procedure of transferring the relevant facts between the countries, the competent authorities, and this is a preliminary process before the mutual agreement procedure. So this is covered through the exchange information. Another thing is the application of the domestic law. Now, our treaty with Germany is the current treaty with Germany is the worst I know. I mean, it will be replaced next year, but the current treaty does not provide the exchange information regarding the application of the domestic law. For example, I had a case of a certain Israeli taxpayer who claimed he took loans from his brother-in-law that was a German resident, and I asked the German tax authority whether that brother-in-law has the sufficient resources to give him that loan. The request was declined pretty fast in a German efficient way, claiming that the treaty, or the exchange information article of the existing treaty, does not cover the exchange information regarding the domestic law. It only covered exchange information that is needed for the prevention of double taxation. And similar to Singapore, as Germany had no interest, no withholding tax was omitted, then no information was exchanged, which is quite bizarre because at that time I was president of the OECD and Germany was kicking Switzerland and saying you don't disclose enough, but it didn't set the personal example in that case. And other things are the CFC rules. We have CFC rules that are enforced in Israel since 2003, was recently amended in the end of 2013. And sometimes you need to understand how is the item of income classified in the source state. For example, a capital gain that is under the Dutch participation exemption. We have to understand whether that is an exempted income or is that an income that is not in the tax base at all, to include that in the relevant profits for the deemed dividend when applying the CFC rules. And of course, the general purpose is of course the prevention of avoiding tax. Now, basically speaking, there are three kinds of exchange information. Exchange information on request, a spontaneous exchange information, and automatic exchange information. Exchange information on request was and still is the only practice performed by the Israeli tax authority. Of course, we'll get to the FATCA and we'll see that pretty soon Israel will exchange automatic information with the IRS. But for the time being, only exchange information on request. It's a drop in the ocean, of course. I didn't have a chance, and neither my predecessor, neither the persons replacing me, didn't have the chance to grasp the information needed to detect the Israeli taxpayers not reporting their foreign sourced income, because you need to send a specific request for Mr. X. You need to have a preliminary information, and you need to convince the requested state that there is some income evaded. The other thing is spontaneous exchange information. I'm an Israeli taxpayer, I'm doing an assessment procedure, and I find out that the Croatian taxpayer sold shares in an Israeli corporation, and I'm suspicious. I think that this Croatian taxpayer did not report that capital gain to the Croatian tax authority. I initiate a spontaneous exchange information to the Croatian tax authority, saying to them, look, this Mr. C, I sold shares in an Israeli corporation, please check that he reported. This is not, I mean, at my time and after my time, I know that they received some spontaneous exchange information, but the Israeli tax authority's policy was not to initiate and transfer spontaneous information. And the third one is automatic exchange information. Of course, we are dealing with now with the CRS model and the FATCA model. At my times, we received CDs, but of course it will now change. This is, of course, information about thousands of taxpayers with a table, the item of income, the amount of income, tax withheld at source, the date that the income was derived, the identity of the taxpayer. Now, we had some countries delivering automatic exchange information, but we had poor record of identifying the Israeli taxpayers because there was no tax, there was no TIN. And if you don't have a tax identity number, Mr. Avram Cohen is really popular as Mr. Singh is in India, so you have difficulty to tracing those taxpayers. So we pledged for, I think, 30% tracking of taxpayers, for example, with Japan. And we had some poor record tracking down those taxpayers. Now, in 2012, the OECD published an important report about the automatic exchange information. It explained that what is the automatic exchange information, how it is replaced, and what is the legal base for the exchange of automatic information. Of course, Article 26 does not state explicitly that you can exchange information automatically. Instead, the contracting state will exchange information that is foreseeably relevant. But of course, the interpretation of the OECD in the commentary is that it covers also automatic exchange information. And of course, it works as we know. The EU has told the OECD that without the Savings Directive, they think that 75% of the European taxpayers would not have reported their residence country of their interest income on deposits. So the important thing is, I'm sorry for the image, it's not really clear, but if you look at the arrow, this is taken from that report, information sent automatically to a number of countries by. And you see that Israel sends automatic information to 0 countries. We did not exchange automatically. It will soon change next month when the first exchange information in the framework of the FATCA will be exchanged by the Israel Tax Authority to the IRS. And you see here again, Israel is above the arrow. You see here that we had 4 countries during 2012 that receive automatic information from them. Now you must understand that this automatic information is a bulk information, doesn't have the necessary documents to call the taxpayer and to assess it. I believe that the automatic exchange information will lead to exchange information on request. So I guess the Israeli Tax Authority will say, okay, below 100,000 new Israeli shekels, we don't care. Drop students, drop pensioners, we'll focus on the main population that is interesting. And after the automatic information is being received, we will switch into the exchange information on request, asking the Israeli Tax Authority will ask for specific documents. Otherwise, it will be impossible to assess. And of course, we know after the February 13, 2014 report by the OECD that the CRS, the Common Reporting Standard, was adopted. The United States of America does not like that very much, and of course it has its own model of the FATCA, but according to the CRS, as we heard in the previous lecture, most of the European countries will start implement that in January 2017. Israel will start implement that in September 2018, and of course Israel has its own pace. I suspect that there may be another delay, but Israel has declared, at least, that it will implement that regarding information as of January 1st, 2017, but it will start doing that only in September 2018. Now, as I told you, paragraph 2 of Article 26 deals with the authorized persons. And usually we have obligation of secrecy in the Israeli ordinance, but of course we have an explicit section in that ordinance saying that even if there's a general duty to keep all information secret, if there's a treaty, first of all, we have a treaty override under section 196. If there's a treaty, of course, it overrides our domestic law. Secondly, we have a specific article about the secrecy, saying that the treaty also overrides this duty of secrecy, meaning that if there's an exchange information article in the treaty, you must transfer the information. And of course, the people that are authorized are the assessment people, the collections, or the oversight of the above. The taxpayer, through that assessment procedure, if the tax inspector is relying on the information exchange, he must disclose to the taxpayer the information received from the foreign contracting state, and of course the court is authorized. Of course, the exchange information is limited, as discussed in paragraph 3. And of course, another thing is reciprocity. Of course, you cannot ask a certain country to go beyond its acceptable domestic measures if you don't do it yourself. So there must be here a reciprocity. Another thing is, must you notify the taxpayer about the information exchange? We didn't have that. But the United States has that. I know that it took a lot of time to exchange. When I asked the IRS for financial information, they told me, hold your horses, because we need to notify the taxpayer. He will be given an opportunity to crush the summons. So it will take time, and time took 3 or 4 years. And sometimes it became irrelevant when the information was actually sent to us. Of course, the other way around is not that. You need to transfer information to the IRS in 5 minutes, otherwise it will be a catastrophe. But we know that the Israeli domestic law did not have that, and now, through legislation passed last year, we have that. I and my colleagues from the Israeli Bar Association were successful in persuading the Knesset, the Israeli parliament, to insert that into a big legislation amendment of the ordinance that will enable the automatic exchange information, and also the signing of TIEAs, that is, the agreements with tax exchange information agreements with tax havens. So this will be the process with a timeline of 14 days, but still the taxpayer will be notified. And of course, the advantage of letting the taxpayer know is, of course, avoiding mistakes, identifying the taxpayer. And on the other hand, of course, the Israeli Tax Authority will argue that notifying the taxpayer will damage the process. But this was how it goes.
May I interrupt for a second? My background is in taxation. And in the old days, I'm talking about the 1980s, in UK, the Inland Revenue suspected there was something going on. So they wrote to the taxpayers, we believe there might be an error in your tax return. Please contact us. And they were extremely vague about this because they were hoping the taxpayer wouldn't just tell them about that bit, there are all the other little bits and pieces. And that, I think, is quite an interesting and clever way of getting information. So if the Inland Revenue of a particular country knows there's something, ask a wide question to the taxpayer and see what answers you get.
Well, again, sometimes I agree with what you say, and in Israel it's quite different. For example, when we received automatic information from Denmark, and we had the special case in June 2010, we didn't ask the information, we simply sent the investigation unit that knocked his door at 5 a.m. in the morning and took him and arrested him. So I agree with what you say, but then again, we had some mistakes, identify the correct taxpayer, and draft, and what you suggested is also, I know in Scandinavia also, Norway or Denmark send the taxpayer a letter saying, we have some information from a contracting state, we expect that information to be included in your tax return. This is not the Israeli way. We're less kind and we're more aggressive. I mean, I'm talking as former Israeli tax authority official, but of course this is how it goes. And you see in recent years an aggressive trend to immediately investigate. We have a special case of a model that is also dealt criminally, and the question is residence. I remember when I was there, I told the investigation unit, residence is always a civil question, it's never a criminal issue. But it turned out to be that nowadays it's a criminal issue. So yes, but then again, you also have to have the right balance, and you cannot hurt taxpayers. They are human beings. they are entitled to be involved, and then what will they know? Sometimes, in the majority of cases, I believe they will not object. If they object, they will go to court. But if the court gives the decision that they must disclose, they'll disclose information. I don't see anything that will jeopardize this process. This process is quite slow. Even now, the exchange information on request, you get information, if I'm optimistic, after a year. So this is not the case. What we are afraid is, you had yesterday a lecture by Yair Binyamini about the tax haven. We have a tax holiday for new immigrants and veteran returning residents. We are afraid that France will demand an automatic exchange information, demand information about new immigrants coming from France, and they will ask that the information will cover also a period that they're already an Israeli residents. They made Aliyah in January 2015. They are Israeli residents as of January 2015. Still, France will ask in the exchange information request that we will hand out information regarding also the 2015 tax year. This is something that must be prevented and will be prevented if the taxpayer is notified. If it's not notified, then the Israel Tax Authority may hand out information, not legally. So you must, of course, have the right balance. Another thing is what I talked about with paragraph 5 about the bank information. And I must stress here that the exchange information is always the last resort. We ask the tax inspector to exhaust all measures they had in the domestic law, and we of course checked that asking the information is not contrary to the Israeli domestic law and the procedure. And of course we know that the exchange information does not cover trade secrets, and you must establish a ground for the information exchange. If a German taxpayer selling shares in an Israeli corporation is taxed exclusively in Germany, Israel has no interest in asking the German tax authority for information regarding the sale of shares. So you must establish a ground. Now, Israel has some problematic countries, meaning Israel has treaties with some problematic countries in reference to the exchange information scope. Germany, I mentioned, horrible convention, amended, and we have a new convention that will be effective as of next year. The United Kingdom is also, Sweden, South Africa, the Netherlands. We have an exchange information article restricting the requested compliant authority to look only in its records. No audits, no requests from banks or third parties. This is, nothing. If they don't have the information in their computer or in their files, you cannot have that. Luxembourg, Switzerland, Belgium, Austria they still don't have paragraph 5 in the exchange information article. It would be bypassed through the CRS, through the mutual assistance conventions, but still, and with Belgium and Austria, we concluded, even at my time, 6 years ago, we concluded, we signed in initials tax treaties. They are still not enforced. I don't know why it takes years here to ratify the treaties. Switzerland and Luxembourg did not amend the treaties. With Switzerland, I understand they had a meeting in Bern in 2011. Nobody took a protocol, so nobody remembers what they agreed with. But Singapore is also problematic, as I explained, because of the lack of paragraph 4. The Philippines also have bank secrecy, and we don't have Article 26.5. If we just analyze the recent developments in Israel and the world, then from 2005 you see the signing of thousands of TIEAs between the OECD countries and tax haven. March 24, 2009, the historic announcement of the 4 problematic OECD countries, as I mentioned. In March 2009, Israel also passed successfully the accession process to the OECD, is a member of the OECD since September 2010. And it's also joined the Global Forum on Tax and Transparency, and was audited in 2013 and 14 but was judged poorly as partially compliant. In May 2016, there was a declaration by the Israeli Tax Authority, by the General Director of the Israeli Tax Authority, that Israel will join the CRS as of September, in September 2018, again covering information from January 1st, 2017 onwards. Now, I want to talk a bit about this new amendment. In November 2015, there was an amendment in the Israeli tax ordinance regarding exchange information. For the first time, there was an actual definition of an exchange of information agreement, and this was important because before this amendment, Section 196 of the Israeli ordinance only covered double taxation conventions, meaning that if you wanted to sign an agreement with the British Virgin Islands, you couldn't do that because it was not covering a full double taxation. It was covering only exchange information. So under this amendment, the General Director or the person that was authorized by the General Director is entitled to transfer information to the other contracting tax authority. Of course, after that foreign country asked for that information or initiated by the Israeli tax authority, if the certain conditions are met, and the conditions are that the information is necessary to enforce the tax laws of the other country, the international agreement, the International Exchange Information Agreement, provides for a secrecy. The requesting country must keep in secret the information transferred by the Israeli tax authority, and there must be, of course, another condition met. Another condition is that the requesting country will use that information only to enforce its domestic tax laws, will not transfer that information to other factors such as the police or anti-money laundering unit, etc., will not pass that into a third country. So it's pretty limited, and it's, again, designated to the exchange information on request. And again, the Israeli Tax Authority will not transfer information if will, of course, hurt or damage Israel's security, the peace of the public, and or in an investigation pending regarding the affairs of the State of Israel. And the General Director of the Israeli Tax Authority is also authorized to decline a request if the requesting country avoided or declined in another case a request of the Israel. So the reciprocity as condition is also here. And now, as I told you, there is a right of the taxpayer to be notified, but they actually nullified it. Why? Because in the law, if you read the law, it says that only if the requesting country consents, then you will notify the taxpayer. So if France is sending a request for information and the Israeli Tax Authority answers back and say, look, the taxpayer has a right to know, but if you refuse, we will not let him know, and the French say, no, don't let him know, then the Israeli Tax Authority will not let him know. So it was quite modified in that legislation. And yes, 5 minutes? Okay. Another important amendment to the Israeli tax ordinance was reached in July 2016. After the general framework was established, the Israeli Tax Authority needed to establish a framework for the FATCA agreement and the CRS. And there is a detailed amendment of those sections saying that the government of Israel and the Israeli tax authorities are authorized to tell the financial institutes in Israel to deliver information or to check the suspicious taxpayers, in the case of the FATCA, the US persons, and they must notify the taxpayer that they are registered in the bank as US persons. That the same will go to the CRS. The thing is that we have a lot of new immigrants and veteran returning residents and you see a phenomenon where, for example, a person coming from France, been here for 30 years, is still registered in the bank as a French resident, because he's a French resident, but he's, of course, he's not a fiscal resident of France, and the banks fail to understand that. And the purpose of letting the taxpayer know is, of course, letting them the opportunity to correct this registration. Otherwise, under the CRS, we'll see cases where the Israeli Tax Authority will transfer information or transfer information to France on people that are 30 years here. This is illogical. So, again, Israel joined the Convention on Mutual Administrative Assistance in Tax Matters really late. It was the last OECD member state to join because of this amendment taking place in November 2015. It joined after this amendment in November 2015. And this is the legal background for the CRS, because under this convention enables the CRS. And as we talked about the FATCA was delayed. Originally it was intended to be implemented in September of last year, but it was delayed in a year. And under the FATCA, Israel signed a Model A FATCA agreement, meaning that the Israeli banks will transfer information to the Israeli Tax Authority, and from the Israeli Tax Authority, the information will be exchanged to the IRS. No direct exchange will take place between the Israeli banks and the IRS. And of course, the sanctions, as we know, is a 30% withholding at source if you don't sign this agreement. And the process will actually take place from November 2016. And there's no way to run for the Israeli residents that are US persons. Of course, some of them renounce their citizenship, but if they don't renounce the citizenship, then of course they must have this Israeli bank account of them reported. The thing is, most of that population, we have 100,000 US persons that are Israeli residents, most of them are employers. They don't have they don't have a business income. And of course, the tax burden in Israel is much higher than the tax burden in the United States, so no actual tax liability will come from this. But the thing is, there's exposure, because if you didn't file the tax returns, there will be penalties. So Israeli residents that are US taxpayers need to, of course, sort that out.
Yes, but surely there's many US retirees who come to Israel with very substantial assets as well.
Of course, and if they didn't submit any tax return in the United States, they have a problem. They need to deal that fast, either by the streamline voluntary disclosure in the US or through another channel, but they need to disclose that fast, because otherwise, there's of course a question: what will the IRS do to those taxpayers? There are some taxpayers that are here, never set their foot in the United States. So what will be done to them? Only time will tell. But this will happen. So thank you very much.